Hello friends, in the current video we are going to see how to do a prompting for analyzing 2 years balance sheet. On the screen is what are the use cases we have completed so far. You can see tick mark and the current topic balance sheet analysis. Within balance sheet analysis we have completed common size balance sheet and ratio analysis. If you have not seen them, please check my previous videos. The current video the focus is on horizontal analysis. So just a brief of what is horizontal analysis. Let me pull out a balance sheet. It is basically a comparison between 2 years balance sheet statements and try to gather inferences line by line analysis. If there was no chat GPT, how I would be doing is pick up each line item from the balance sheet, property, plant, compare it between 2 years, make a percentage change between last and this year, and gather inferences. Whenever there is a huge spike, or say some 10% variation, 50 to 20% variation, those are the things which gather attention to see what is happening. So the prompt for this analysis would be, please provide a comprehensive 2-year analysis of the attached balance sheet with the following elements. Format of analysis, use tables, one column to show the percentage difference, another column purely for inferences and inference on the percentage differences. Conclude with the priorities list of findings. I think anyway we are telling that it is summary is here. Then highlight significant variations. Any item which is above 10%, just flag it. Flag it means it can be bold or italicized. Special attention to extreme variations. Then category wise, because balance sheet has assets liabilities, so I'm trying to break the analysis also in the same fashion, like assets, liabilities, and equities, as well as the key financial ratios pertaining to balance sheet. As I told you in my previous videos, the use of red flag and prompts is very powerful when it comes to chat GPT or any model. You'll be able to see some insights or red flags which normally it's very difficult for us to catch up, but the model will be able to um, bring out or highlight those differences easily. And finally is the summary. So let me take two examples. The first one is the McLeod. So McLeod has a balance sheet, and here goes the prompt. So you can see that the percentage changes in one of the columns and inferences. What does it mean? Like 390%, there is something which has increased. So it's telling that it's a significant increase, possibly revaluation or new strategic investments. So like that, you get one line inference for each of these comparison for each of these line items. So when the assets on top is the first is the assets, then comes the liabilities. Liabilities also there's a decrease in many of the items. And equity portion. Equity portion means there's a dip in the shareholders' equity, which possibly could be due to loss posted or huge payment of dividends more than what the company actually earned. And of course, we are requested for key financial ratios, so that also has come up here. Now, red flags. So the current ratio is less. Yes, it is 0.11. It is very less. Though it has improved from the last prior year, it is very less. The ideal one should be minimum 1. Then solvency almost 98%. So for its day-to-day activities, it is borrowing heavily. Almost 90% of the total borrowings is short term. So these kind of inferences is what GenAI or a model will be able to bring out, which we find it difficult, or we may even foresee it. We may even miss it. I mean, we may even miss it. So operation efficiency, very limited change in total assets, major spike in cash and other investment may not be sustainable. Unusual fluctuations. So summary insights, overall financial direction, contextual observation. So it is asking, do you want a PPT or Excel? Please comment on the investment desirability. Desirability of from this analysis. I'm not going to ask about this company. Based on this analysis, what do you feel like? So there are some positive indicators, red flags. It says like something has virtually vanished. Non-current debt has virtually vanished actually. Risk perspective, investor suitability not recommended for conservative or income investors. Conclusion, high risk. So similarly, let me do this analysis for NMDC, the mineral company held by the PSC Pact. Let us see how this report comes out. See, for example, capital work in progress has decreased. So almost it's 35% decrease. It is showing that significant project completion or shift to plant equipments. Then non-current investment, that is also having a substantial increase. And similarly for current assets, bank balances have increased steeply. So what I would like to emphasize, apart from the prompting part or the output what we get, a simple balance sheet. Nothing. I'm not doing any complex analysis. Just line by line comparison. Each line will give you some inference, which you can put it as a overall summary or a big picture of what the company has done over the last 1 year. So current liabilities, like current borrowings, negligible exposure. So almost everything under current liabilities is normal. Equity position, healthy profit retention, does build up huge amount of reserves and financial ratios. No major solvency or liquidity risk detected. I can put here also, please comment on the investment desirability of this from this analysis. So let me also extend this prompting to another model, Claude, and let us see how the output comes. So it is categorizing investors into long-term dividend seekers growth. For all this category, it is desirable, and what is the reason based on the analysis of just a 2 years balance sheet. So as I told you, let me take you through Cloud as well. I'll just put one balance sheet to show the outcomes. I'll be posting all these prompts in my prompt library website, maybe tomorrow or possibly by Monday. You can check out or download the prompts. Here too we have a similar pattern, like it starts with the non-current assets, tabulates all the non-current line items, then followed by the current assets. There is something called as biological assets in this statement. So it is guessing that it could be something on tea plantation, because the most interesting part of this is a company which is into tea this thing business, and it says likely tea plantation assets. I gave just one page balance sheet. Okay, then assets, non-current liabilities, total liability. So here Claude also does a very decent job, and it could have some score better than ChatGPT in some places, and maybe some minuses in some more topics. So red flags is also fine. So let me ask the same question. Please comment on the investment desirability based on this analysis. It says it's a high risk investment. Why? Liquidity crisis, too much debt, asset allocation is very doubtful. It says that overall 60% of assets are tied to non-current loans, which is highly unusual for a tea company. Friends, these kind of insights, unless you have a complete exposure to a tea business, you will be able to really difficult to figure this out. But just by uploading this balance sheet, it says that something unusual here. Equity erosion, then limited positive signals. There are positive signals, but they are very limited. The final verdict: not recommended for investment at this point of time for this reason. So friends, just a simple balance sheet analysis, structured prompting gave it too much insight sufficient for you to accept or reject a company for investment purposes. But let me put a placeholder here. This one analysis itself is not sufficient or no way golden standard to go ahead with the decision. You have to do a couple of analysis to get a multi-dimensional overview before taking a decision on investment. So let me catch up soon in the next video with a more interesting topic. Bye till then, friends.